You're with Renofi. What is Renofi?
Yeah, sure. So Renovation is, we tag ourselves as the world's first post-close renovation lender, and so what that means is essentially someone can purchase a home or refinance their current mortgage. Have like a lot of people have done over the last few years, get that super low interest rate on your first mortgage. No one wants to touch that, right? Once they've got it.
Absolutely. Yes.
We can come in and we lend very similar to other construction or renovation lending programs. We lend based on the after renovation value of the home. So we'll essentially look at your property and value your property as if the construction was already completed. In the obviously with an ADU, we're looking at how much value will that ADU build add to the overall property, and then we'll lend based on the future value of the home. So that allows people to access their future equity. And so a lot of
Yes.
people, we've gained a lot of equity over the last few years, but for a 200, $300,000 ADU, $400,000 ADU, if you've got $250,000 of equity, that's not 400, right?
Absolutely.
Um,
Big difference.
yeah, and the real secret sauce, or the huge thing that differentiates us from other renovation lenders or construction lenders, is that we will lend in second lien position. So you
That's
don't
the
have to
huge
refinance
difference.
your first mortgage.
So
Yep.
that's where we want to stop. So I want you, as we move forward in a little bit, to explain what a reconstruction or renovation loan is, because quite honestly, we deal with just first position loans
Yep.
most all the time,
Okay.
and I would say that most homeowners are going to be more generally familiar. But more important than that, right now, is what you just said. So, as a realtor or somebody looking and talking with clients, and they want to do something with lending, it's very difficult. Maybe they don't recognize how difficult it is for us to find second position lending. So
Mhm.
the first stays intact, you bring a second loan on, and that second lender is not, I mean, you're the first I've seen that's been willing to set in a second position on future valuation, right? In
Right.
most cases, it's a cash out refi, HELOC type of a thing. It's like you have to have so much equity in your house to
Hmm.
pay for the whole construction process. And I think that in general, that's what people are most familiar with. So I just wanted to truly stress how important that is, because if somebody doesn't have tons of equity in their house, what do you do? And explain that renovation process, how that goes.
Absolutely, yeah. So generally, we're looking at two major aspects, right? So in second lien position, there's already a first mortgage in place more often than not, and so we're going to take what's called the combined loan to value ratio, and so we're going to look at the current value of the property. We're going to do the due diligence on the property, work with the homeowner and the contractor, obviously, to really get a
Yes.
true aspect of, and again, if it's an ADU, what kind of ADU, what materials are you using, are they high end, medium, low end, how does that compare with the primary dwelling on the property, how does that compare with the neighborhood, right? So
Yes.
every little thing we can do, all the way down to 6-inch baseboards have better value than 4-inch baseboards, right? So we really try to tell the full story of the property, brushed nickel versus plastic, right? Those kind of things.
Right.
So
Absolutely. It's
once
huge.
we yep, and once we built that full package, we order an appraisal on the property, which again indicates current value, and we're telling the story to the
Projecting.
so he doesn't have to make it up on his own, right?
Yes.
And that appraiser is then going to value the property with the improvements, and then we will lend up to 90% of the future value of the property.
So if a person going to a different lender, just to show the difference here, that's 90% of future value, as compared to if you have to rely on a HELOC or cash out refi. 80% normally is what I think I see most often for actual current value, is what they're going to, the equity and all of that. So current value at 80%, taking some of the equity out of there versus 90% of the future value. That's a whole lot more money available, capital available to actually build. Would you say that? It's
No,
true.
absolutely. Yeah. I mean, our data shows that on average, when we compare the average homeowner's ability to access their equity versus working with Renofi, it's approximately 11 times more equity available working
That's
with it.
huge.
So that can add up for sure.
That
And
definitely
by the
can.
way, the other calculation is we'll lend up to, so it's 90% of after renovation value. But another way to look at it is we'll go up to 125% of the current
The
value. So if
current.
you compare 80, and there's some other credit unions, for example, that'll go up to say 90% combined loan to value on a HELOC, on a home equity
Right.
line of credit
But
based on
not
current
everybody has
value.
access to a credit union and they don't
Right.
all do it, right? So
Very
there's,
true. Yeah. So not only do you have to meet the loan requirements, you have to meet the membership requirements. You have to be
yes,
oftentimes in a certain geographic area or have a certain type of job, right? We
yes.
don't care about that. We lend nationally. But yeah. So if you compare, say, 125% of current value to say 80 or 90 of current value,
So
that just shows the
and that's
differentiation.
an important point. Okay. Part of that point is because we'll have people that are not so familiar with ADUs. In our area, the Central Valley, it's different. And I want you to actually comment, if you would, on Northern and Southern California and what you're seeing, what types of ADUs and so forth. So we're going to head that direction. But for our area geographically, we just don't see a whole lot of ADUs because we're so much more affordable. People are very much used to living on single family residences, and a lot of them have a lot of space, right? So they may question whether or not that it truly increases the value of your property. But I would say that if you're willing to give, quote, 125% of the current value towards the building of that you see that definitely there is a huge difference in the equity that you can generate and build right there on your own property just by adding an ADU. So sometimes that message gets lost a little bit, right? People are like, well, okay. So what do you find, speaking of equity, that people most times, or are some of the current trends going with why people would bring an ADU onto their property?
Yeah, absolutely. There are a number of reasons. Number one, just to kind of give a little backstory. So, over the last couple of years, the state of California has just made sweeping changes, and as
Huge.
recently as this last week, we just passed
Yay!
the fourth. Yeah, so a lot
That's
of
big.
yeah, a lot of right, a lot of the problems, or a lot of the laws are working against kind of the what you can do with your backyard, right? And so
Yes.
we have a housing density crisis, right? We don't have enough affordable housing. And so,
Yes.
there's a massive market out there for renters looking for affordable housing.
Yes.
So I don't have stats for the Central Valley, but you mentioned, say, Northern California, in the Bay Area, a one bedroom, one bath ADU, the average rent's pushing $3,000 a month. A two
Wow.
bedroom pushing 4,000.
So
So
we're not that, as you're correct, right? But even still, we see, and the smaller amount of units that we do have here. I mean, people, they haven't kept current with the rental rates here, they are so ridiculously high compared to what we're used to. So honestly, you can take 800 square feet and easily get. I mean, I've seen $1,500 a month or even more, and for
for
us,
sure.
that used to be considered like, you got to be kidding me, right? So there are huge benefits, and while we don't want to see those rates continue to climb, right? They have. And
Mhm.
so it's just an option to be able to put in, now the homeowner becomes an investor on their own
Sure.
property, correct?
Absolutely.
So
Absolutely.
how many ADUs are you seeing some of the people in the Bay Area put together on one property?
Yeah. So depending on the type of property, some people, especially with duplexes or multi-unit properties, the guides are such that you could do, for example, if it's a duplex, I think you could put two separate ADUs on there. You could
Yes.
do garage conversions on top of
On
that.
top of
Right? I
that.
mean, it gets pretty interesting what's available out there. So
What
yeah,
about single family? What are you seeing? And also speak to us about prefab and manufactured. You're in a great area to be able to see where that's all headed, where we really haven't seen that many here in the Central Valley.
sure, sure. On a single family residence, I would say the average is going to be one, right? I mean, it's just usually what people tackle, but we're definitely seeing more and more, especially in markets where In some markets, ADUs are a little more mature. They've been being built for the last few years now with more
Yes,
popularity. And
2017 on, yeah.
sure. And so what we're seeing a lot of is, hey, I dipped my toe in the water and converted my garage to an ADU, but and now I'm cash flow positive on it. It's a great
Yes,
thing. I was a little worried about it, but it's going really well. And so now I'm going to take that backyard that I'm not doing anything with and build another ADU on it, right? And so
yes,
we're definitely seeing that progression happen. And depending on the space, depending on the size requirements, depending on the cost, we are definitely seeing a lot more. Sometimes custom's going to be the only way to go, but
right,
we are seeing a lot of modular, prefab, manufactured. Right? I mean, the market for those is growing, and a lot of times people hear the term manufactured or modular or what have you, and they picture the 1970s trailer, right? It's like
yeah,
construction products have come so far. I mean, we've got things like what's called a SIP panel, a structure insulated panel, and it's almost like Legos, meaning like you can just make it whatever you want, with
isn't
the
that
proper design
amazing?
requirements, right?
And so
Um,
what about even the folding? Have you gotten a chance to work with any of those that fold out and what, boxable
yeah,
or something along those
absolutely,
lines?
yeah. Some of them come in on a crane, and just get
Yeah,
dropped in, and then yeah, exactly, folded up, and
yeah.
there's your
Just the
shell.
sheer volume of new builders, new manufacturers, big facilities that are coming onto the marketplace right here in California shows you, where they think the future is going to be with all of that. So you made a really good point about, if someone was looking at, hey, I don't know, I'm a little bit nervous about the JADU, the junior ADU,
Mhm.
the garage, the bump out, and so forth. And so, how does that go with your lending package? Is that something that's an easier thing to get done potentially than the structure that stands alone, or how do you see that?
It's probably a little easier just because you're not pulling a permit for a new dwelling, right? It's
Right.
just adding on to an existing dwelling. I mean, there's still a permit process, obviously, but yeah, that's probably a little simpler. Going to be a little bit less expensive. The nice thing that we see is, working in real estate, that not all square footage is equal, right? So if you have
Yes.
a garage, the value of your property. So by the way, I mean the top ways to add value to the property from a renovation standpoint. Because by the way, we do a lot more than just ADUs, but California ADUs are absolutely number one of ways to do it. Add square footage, and then kitchens and bathrooms, right? And there are a number of other things, but if you want the highest ROI, kind of the flipping your house to yourself, so to speak, right? Where,
Yes.
you
House
get what you
hacking
want.
and all the value you get. Yes.
Yep. So adding square footage is a great one, and if you're taking a garage, which is essentially concrete and sheetrock, more than likely,
Right.
and enclosing it and adding it, making it functional square footage, you're absolutely adding value to your property right there. A detached ADU, same thing. And what I will tell you is in markets where ADUs aren't super mature, if an appraiser doesn't have a ton of comparable properties to compare to,
Yes.
it does get a little bit harder for the appraiser to understand what value is going to be. So they're
Yes.
they're often very conservative. But even on a conservative appraisal, we still often see 60 to 70 cents on the dollar coming in, dollar for dollar. And so, when you think about the cost of something, say something costs $100,000, but even if you only got $70,000 of value for your 100,000, then it really only cost you $30,000, right?
Well, and the other thing too is that in most cases, and I know this from what I do, when people go into redo or construct or add space, or they have a new design concept of their house, they don't tend to move in 1 year, right?
No,
So
no.
if you've gone to the trouble and a renovation loan, let's talk about the process after this, but if you've gone to the trouble and gone to the effort to put all of that together, usually you have a reason. So either you're moving family members in, or you want to rent it because you want rental income. Well, I'm going to suspect that to stay there for at least a good period of time. So I try to mention that to people when we start to talk, because the truth is this: If you rent it out, you've got the value there. Okay. And then the appraisal situation, which is a real one, and especially in our area, they're not so familiar with it yet. But in my opinion, with what we see coming forward, there's going to be so many more ADUs that rapidly the appraisers
Absolutely.
are going to catch up. So I want to talk about the design process and the actual uh, process of how it works, but I also want to make sure we don't forget about the $40,000 grant and what you're
Oh,
seeing with
absolutely.
that.
Mhm.
Okay. So what is the process of a renovation loan?
Yeah, so generally, we like to start just with a quick phone call to talk about, kind of who are you, why are you here, what are you looking to do, and really just from a very high level talk about the feasibility of, where are you today and where are you trying to get, and what does it look like both, financially, how's your credit, et cetera. So just kind of knocking out those first things, and then from there, once we're working off of a concept, our renovation advisors are gonna really, coach the homeowner through, what those next steps should be. And as part of our process, we're doing a lot of the due diligence on the contractor, on the project itself, et cetera. And then we're going to help risk score that project, meaning, you know, hey, here's what I want to do. Say it's an ADU. I want to build an ADU, and I want to build it out of concrete blocks. Like, yeah, that's
Yeah,
probably not
yeah.
the best idea, and your contractor said they wanted to do that. um, anyway, we're gonna we we come in and protect, obviously, to make
Right.
sure people are making a solid decision.
But
But yeah,
let's say
once we
somebody comes in with some sort of, like in our case, if we're going to help the homeowners, we're also going to be pulling in some of that construction information, helping them try to guesstimate some of the costs anyway, so that when they come to you, they've got an idea. Like we have the city of Fresno and the city of Clovis, they already have pre-reviewed plans. So if
right.
somebody comes and says, hey, how much does it cost to put this on your property? We're already going to have some of that kind of dialed in as a guesstimate. If they want to do a build out in a garage or something like that, we're going to try to provide them with an estimate and a little bit of a design. So if we come to you with those things, then you're saying you have the department that kind of overlooks all of it to see, is this realistic? Could this really be good for what you're looking for, what we're looking to do? And then where do you go from there?
Yeah, so absolutely, it's really looking at the feasibility of the project. And what we find a lot, especially with ADU building right now. There are a number of ADU builders out there and general contractors who are doing these projects, but being, kind of obviously a very unique company that offers a very unique product. We end up working with the same companies and same people over and over and over, right? So
Good.
those same plans have
Because
been built by the same lenders, right? And have been brought to.
yeah, you can
Yeah,
count
so
on
we
what
we
they
we
have.
we have, we're subject matter experts when it comes to that, right? So, yeah, so from there, it's a matter of, like I mentioned previously, we go from concept to an elementary design to, again, drilling all the way down. Of course, in the meantime, we're also making sure that the homeowner is going to be able to qualify and afford the payment, that they're comfortable with that. And then once we have all that completed, then we're ordering an appraisal, like I mentioned. And then once the appraisal's back, we're really just dotting I's and crossing T's, and then making sure. So most of our loans are backed by, other financial institutions, credit unions, banks, things like that. We just need to make sure that, obviously, they're going to meet that criteria. Of course, we've done that up front, but there's a double check that happens on
Yes.
the back end before a few $100,000 is shelled out, right?
So you have all of that. So once the loan or the money for that, where does that money go? Does it go into an account so that the project can move forward, or what happens at that point? The
Yeah, so it
time frame.
depends on the type of loan. Generally, we offer primarily two types of loans. It's either going to be a fixed home equity loan, which is essentially a fixed second mortgage, works just like a first mortgage. You take out the loan, and immediately you have a fixed principal and interest payment, and that's payable over, whatever period that you've agreed to. Typically,
Okay.
that's going to be a 15 or a 20-year time period. Um, the benefit of that is it is a fixed payment and a fixed interest rate, so what your first payment's going to be, and what your 240th payment is going to be,
Good.
right?
Okay.
The other option is a home equity line of credit. Home equity line of credit, the negative, which can end up being a positive, by the way, The negative is it is a variable interest rate, and so it's time tied to prime, and so prime is a fixed number, and or excuse me, it's a variable number.
Right.
You have a margin on top of that. So today the prime rate is 6.25. Let's just say you had a margin of 1.25. Prime's at 6.25. Prime plus 1.25. 6.25 plus 1.25. Seven and a half
Seven and a
percent.
half.
Prime drops to 6, your rate drops a quarter. Prime jumps to
So if
7, your rate goes
as
up.
soon as something drops, then if it drops, yay, you benefit,
Yep.
right? Okay. If it goes up, there's the concern is like, oh my gosh, how high could it get? And then there's the uncertainty, but then you also have the potential for the other. So what do you see most people choosing?
Yeah, more often than not, it's the home equity line of credit, and it's
Okay.
for two main reasons. One, just the flexibility of it. You take out the line of credit, it's just like it's an open ended line, just like a credit card, where you don't pay a penny of interest until you draw on it. And so let's just say you have a 12-month construction plan. Hopefully, it's
Right.
shorter than that, but let's just say a
Please.
12-month construction plan that's $300,000. Maybe you owe $100,000 up front, but you don't owe another $100,000 for 6 months. You take
Right.
out the 100, you pay interest on the 100, right?
Good.
And the
Okay.
payments can be interest only
They
for the first
reflect it.
10
Oh,
years.
oh,
Yep.
well, 10 years, that's a long. Okay.
Yeah,
So
and so
I can see
especially if you're
why then.
purchasing with cash flow in mind and
Yeah.
you're renting,
Yeah. So then you
that's
can see why they would choose that option, right?
absolutely.
The interest only payments, cash flow is immediate, and you're thinking and within 10 years, somewhere that interest rate, you may want to lock it in later at a very low rate or something along those lines. I
Possibly,
could
but
easily,
I
or
heard,
leave it if it isn't bothering you.
yeah, if you've got that 3% first mortgage and you don't want to mess with it,
Oh,
then
that's true too. There you go.
leave it alone. We're definitely,
Just,
definitely
yeah.
seeing that.
And just throw money towards that principal payment. So that would be a good one. So just quickly, timeline. What do you see as a pretty typical timeline? I mean, I just want people to know that it's probably not 2 months before something is going to be constructed. What do you usually see as something that people should have in mind for a timeline to get things once the lending is done, get the actual build finished?
Yeah, and it really depends on the type of construction. So you mentioned kind of the prefab modular,
Yes.
right? We've got supply chain issues, in the construction industry and remodeling industry, just like everywhere else. It's getting better and better and better, right? Especially now that more things are being, truly manufactured.
Right.
Um, so, sometimes if it's, hey, we reserved our XYZ unit from this ADU builder, we paid a deposit, financing's done. I mean, a lot of times it can be, permits are pulled, right? It can be just a couple of
Right.
months, before the crane's coming in to drop it,
Isn't
right?
that awesome? So I was in conversations with one of the manufactured housing companies, and they're like on a 7 month build out. Once they get the
Mhm.
deposit, they'll be done in 7 months. So you figure if you get your permits pulled and all of the different things, the lending done, that typically definitely could happen.
Mhm.
And talking with our contractor, the stick built portion of it is several months longer just because of so many of the issues that you're talking about. They have just as many difficulties getting uh, people and materials on
Yeah.
site as well. So that's for sure. So tell me about the $40,000 grant. What do you think about it?
Sure. Yeah. I mean, it's wonderful. The California Housing Finance Authority or Agency.
Yeah, Cal Hoppa.
Yeah, Cal HFA. I just don't remember if it's agency or authority. Funny. Uh, yeah. So there's a $40,000 grant available to anyone in the state of California, to be put towards the construction of an ADU. The forty
Yes,
thousand dollars can only be used towards quote unquote soft costs.
soft costs.
Right. So you can't use it towards the actual construction, permits, drawings, things like that. All
All
the
their soft
all
costs.
the, all the front end stuff, as well as things like closing costs on a loan. So if you're obtaining
Yes.
financing, yeah, you can use the grant towards that. The average person right now, I just spoke with them yesterday to get a quick update on a couple of things. The average, and I think there are close to 2,000 grants left. So, so there's still of
Yes.
2,500. So they're they're definitely being used, but there's still
Yes.
a lot left. So they're
So
not going away
to
tomorrow.
catch people up that aren't familiar, because this is brand new for us, especially we haven't really heard much here in the Valley, right? So all the way up until about a month ago, very few of those grants had been used. They
Hmm.
just, the
Right.
processing of them, and they couldn't get pre-approvals, which now you can get pre-approvals, which is really cool. For anybody listening in the Valley here, the maximum income a person could make to qualify for, in case you think that's not going to work for you, is $159,000. And that's one person on the deed can qualify on their own. So there's a lot of things that boom, boom, boom have been changing just so rapidly in the last 2 months. And then most of those that have been dispersed recently. But yeah, it's my understanding that the new law we just got passed last week, there's like 5 times the amount of money that's going to be in next year's round. So, I mean, they're just gearing up and getting them out, and we're going to have far more of those grants. And a grant is something you don't pay back. So it's pretty awesome.
True, true. And no guarantees, right? but
No, no,
the the program is going very well.
good.
The housing crisis is not going away anytime soon. So
Absolutely.
we feel pretty comfortable that that we should see that we should see some additional funds in the future once these run out. And by the
Yes.
way, yeah, you're right. Fresno County is 159,000. Some of the other counties are significantly higher than that. It is household income, but you're absolutely right, Steph. If one person in the household qualifies for the loan, that's the person's
That's
income.
enough.
Yeah, right. Right. That's the person who, well, you can disqualify yourself, right? Is the issue.
Yeah.
But if
Yes.
you're the only one on the loan and your income is below the 159,000 and you qualify, then you are eligible for the grant.
Yes. So that will be our job, and that's one of the reasons I wanted to have you on. Obviously, we don't do the lending portion of it, but just trying to figure out with the clients that we have, so many of them have great loans and great products, great houses that we put them into. Many of them have asked and talked about, rental properties in the future and so forth. So our goal will be to start to get this message out. We certainly look forward to partnering with you and seeing what you can do to help our clients, really, and anybody that's interested to learn about this, because quite honestly, we have a housing crisis. This is not going away, right? So whether they do that with me, with you, or whatnot, just getting the message out so people will start to actually look into some of these products, or start to question, hey, could this be something that I could help out with? One thing that would be important to mention is that people wonder, well, why are ADUs being pushed on us? And I had to ask that question even about a year ago. And really, creating more density in the areas that already exist is pretty easy to see that probably that's less expensive and a lot faster when it comes to getting services and utilities and all of that to other people. And you start to listen to the reasoning for the state of California, for our governor, for the new laws that are coming down the pipeline and what they're seeing. And you can see that it's true. So now it's just getting homeowners to grab onto the concept and not be concerned about, oh, do I really want somebody in my backyard or whatnot? And it could be, you could need a home office, you can have family members, you can have young adult children that maybe they're not able to get into housing. So our goal is to bring them the options, right? And then to lead them to people like you that are able to help get finding the financing. Because if we can't get it financed, it's not going to happen. So, is there
Yeah.
anything else you think we should cover in
Yeah,
this?
there were a couple things that popped up in my head that I just wanted to kind of throw out there for you. One is just a product feature. So, we were talking about income limits and building an ADU and getting the grant. We actually have the ability to use future ADU rental income to help
Oh,
someone
good
qualify.
point.
And
Yes.
so, one thing we've seen a lot of, and it's very interesting. I think of, hey, you live in a house and then you build an ADU and then you're going to rent out the ADU, right? A lot of empty nesters we're seeing, or just
Age in
retirees who
place.
want to travel and like, man, I don't want to maintain that big house. They'll build the ADU, move into the ADU, and then rent out the main dwelling, and then they're traveling all the time anyway, and like
Yeah,
they don't want to keep up with the big house anymore, and
it's
they're
a
even
great
that much
option.
more cash flow positive. Yeah, yeah,
Well,
it's
and
very
really, they love their neighborhoods. They
mhm.
love where they live. So we have moved a ton of people this last year that the downsizing, they feel like, oh, I can get the most out of my home right now because of the way the prices were. But really, in some cases, they're so fixed in their communities and they love them so much. So there will be the other option we're sharing. And it's just what you said exactly. It's like if you really do love where you live, and some of them have massive lots. So it's not like they're going to be living right on top of somebody, but
Exactly.
realistically, putting that ADU. And I would have to say, that some of them, the manufactured line that we're looking at is beautiful. You go into
Mhm.
those, and I mean, they are made, they're stick built, they're beautifully constructed, they have all the bells and whistles. So probably people will be a little bit surprised at what they actually can build or
Oh
be
yeah.
purchased or whatnot and brought on. So, and honestly, even 400 or 500, there's a big move towards people not necessarily having the biggest of everything.
Mhm.
And I heard a statistic, I think it was through AARP, that 63% of people in America live in 1 to 2 people households,
Hmm.
whether it's a parent child, two
Mhm.
adults, a single adult, but 63%. So that's quite a lot of people that, you know, their housing needs are maybe not the same as a very large family. So,
Right, right, absolutely, yeah. And so, one funny thing too, it's kind of been an unintended consequence. These ADUs a lot of times are so nice that we'll bring in the ADU, and the homeowner will see how nice the ADU is going to be, and it turns into a kitchen and bathroom project in their main house as well. Like we want to
yes.
borrow the 220,000 for the ADU, but can we also borrow another 70,000 to
Well, I
to
was
fix
just
up
going to
the
ask
house?
you about that. I was going to let you finish, but do
Yeah,
people actually do renovation to their own home? Like you're talking about bringing up the value, building
very
equity
often.
in their properties. I mean, quite honestly, it's going to be worth a lot more if the house that you're living in is modernized and brought up to whatever needs to happen, as well as the ADU built. And then when you bring an appraiser in at the very end to actually calculate, or at any point in time to calculate out what's happening, it's going to increase significantly the entire property.
Absolutely, and frankly, we've seen kind of the negative unintended consequence of if your main dwelling isn't, up to par, especially in the neighborhood. It doesn't matter how nice the ADU is. You
Okay,
really need to get your main dwelling, up to
that's a
snuff
good point.
to get the full value out of the ADU because it's appraisers look at it like lipstick on a pig, kind of, right? Just we
Right.
need,
No, that's a very
let's
good
raise
point.
the whole level here. Hmm.
Yeah, and we'll need to keep that in mind for certain. But I don't know why, if there's the ability to work it all in, that somebody, will help bring in those options and get them to thinking about that. Because how exciting! Even if they live in their main unit, why wouldn't they want it looking amazing as well?
Right, and
So,
that's the nice thing about the line of credit too, right? You can have this phased out project plan where maybe you build the ADU, then you move into the ADU and
and
live there
have the
for
other.
a few months while we're fixing up the main dwelling. Then you move back in, and so you can still live on your own
Yeah,
property. You don't have to live in a hotel or with with your friends or something. Yeah, and then you just move right back in and rent out the ADU, and it works out very well.
that's awesome. Is there anything else?
I think that's it. I think we covered a lot.
Good. I feel like we did a good job. I mean, I just wanted them to understand a little bit more, hear what you have to offer. You did a great job of giving it to us super clear. And of course, there's always so many more details, but beyond that, we actually got to sit down and kind of talk it over. But it's not a process that happens in 30 days like the purchase of a house, like I'm used to and my team is used to. But it is something that, with the different resources and the laws, oh my gosh, the laws have made permitting and everything else so much faster. There's all this pressure and awesome packages of things that are available, that the state of California is serious. They want us to have more housing and more affordable housing available. And some people might think that means that you can only, rent them out, thinking of whatever on the affordability side as far as your unit. But a smaller unit is more affordable just in and of itself, right? So usually the price of that is what actually is considered affordable. There's not some sort of a threshold of what you got to rent your property for, or any of that. I haven't heard of
Right. Yeah.
anything
I mean,
intrusive.
a lot of areas. I know. Central Valley isn't. I mean, the average home in a lot of, say, Orange County, for example. I mean, it's well over $1 million, right? And so,
Yes.
$1 million home, sure, maybe it'd be 5 grand a month, 6 grand a month to rent, but you could build a 700 square foot ADU on that property that rents for $2,000 a month.
Yes.
That's an
Hugely different.
extremely affordable home, right?
Yes. I
Hmm.
agree. Especially there. Now you're talking to us. We go, oh my God, 5,000 and 2,000. Yes. No. Period. It's
I
definitely
mean,
the truth.
$1,500 in rent, that's
Yeah.
in certain areas of the country, that's a ton, but that's fairly reasonable. And again, for a brand new, very nice accessory dwelling unit in a nice neighborhood.
Yes, it's the
Mhm.
truth. And then schools and all of that go along with it, right? The ability for
Exactly.
people to be in an area that they want to live. So,
Mhm.
anyway, totally appreciate you coming, Charles, and talking with me and giving me the information. We're looking forward to working with you. And we're actually really looking forward to start telling our clients just about ADUs, the laws, things that are available on the lending side, the grant. It's such a big thing. So I'm thinking that 2023, as we kind of start to roll into that, is going to be a really big year for all of this, and hopefully we'll be able to watch those interest rates come back down, but we don't know, right? So
Yeah,
this is
they
where we're going to
will. It's
go.
just a matter of when.
Well, they
It's not an if,
will,
it's a when. But yeah,
whether
we'll
it
see.
happens or not. We're going to help people build equity in their properties until that happens, and then when it does happen, we'll just add it all together and keep going.
Yeah,
Right?
it's what, marry the home, date the rate, right?
That's the fact. And
Mhm.
that's what we try to mention. So, anyway, thank you so much for visiting. Totally appreciate it. And we look forward to talking to you again.
Of course. Thanks so much, Steph.